I will just give a quick intro and we'll jump right into any changes to the PPP loan forgiveness we've seen on our end and give you guys an opportunity to ask questions. We also have a handful of questions that have come in over our social channels, through our Google form or our support channels that we will also take some time to answer. So just as a reminder, if you are joining us for the first time, this is something Fundera does twice a week on Tuesday and Thursday at 1 p.m. Eastern, just to give you an opportunity to keep up to date with what's going on with loan forgiveness and get an opportunity to have your questions answered by our experts here at Fundera, which are Seth Nelson, our internal SBA expert, and Justin Ridgely, our head of finance, who are spending all of their free time getting to know the details of this program inside and out in order to help you. And if you have been joining us consistently, as a reminder, we try to do our best to get through every question, and if we don't, we will try to continue those into the next session in order to get them answered. So we'll go ahead and pause there and kick it over to Justin, who's going to provide some recent updates on the program.
Hello, everybody. So a few updates. I'm going to start with the most recent one, which came out in a revised frequently asked questions document that the SBA has been putting out through the Treasury website, which I have a link to on the second sub-bullet. But basically, yesterday, the guidance basically extended the safe harbor deadline, which was today and had originally been May 7th. The concept of the safe harbor was if you applied for funds earlier on in the program and were kind of questioning on whether you actually needed the funds. There was some language on, necessity and some other things about, do you have other sources of liquidity, which is maybe construed as the ability to borrow from other types of loans. If you didn't need the loan, you could return it by this safe harbor date and nothing would, no penalties would ever arise from that. It was a little bit, unclear the situation, and some people were wondering, getting a little bit scared about, should I keep the money? Should I return it? So the SBA has issued, not only in addition to an extension or a slight extension to Monday, May 18th, but also clarified one key provision. It kind of goes on top of guidance, I think, that came from Steve Mnuchin previously, which was that any loan over $2 million would be audited, and any under, I guess he didn't really clarify what would happen under, but had said anything over would be audited. This rule that or not a rule, but an answer to an FAQ yesterday, said the language on the page, which is that any borrower under $2 million essentially is deemed to have made that certification of necessity in good faith, which, while we can't issue a legal opinion on this and maybe expect it to get clarified in the future, does seem to say that if you're a smaller loan under 2 million, which is obviously going to be the vast majority of people, you shouldn't expect to have the SBA or Treasury go back and audit your loan amount and question, did you actually really need it, and so I think this is a good provision for most of the borrowers who may have been worried about that. And, necessity can obviously mean a lot of different things to a lot of different businesses. And, once you start to think like, did I need this loan in X month? How much of my sales been impacted? That kind of thing, it gets very murky. So this does a bit of clarification there and saying, basically kind of don't worry if you're under 2 million. If you need this money, and applied in that good faith, then we take your word for it, and that's that. Again, don't want to come out with a final opinion on that, but that's kind of what most people are reading it as. So it's a good thing for the vast majority of borrowers that don't have to kind of have that overhang of potentially being audited. The second point that I wanted to hit on was actually, something that came out, I think, on April 30th that we didn't cover in our last webinar, and I just wanted to highlight it as something to follow. Is that the IRS came out with a rule that basically said, if you use, your funds for these categories and you ask for them to be forgiven, then those amounts that are forgiven will not be deductible on your taxes, which is the same thing essentially as making them as, additional revenue, and would increase your tax bill. Most people's reaction to this was, what the heck is the IRS doing? This is pretty out of touch with what the purpose of this is. And, this is including lawmakers have been saying this. So it kind of, seems likely that this provision will get rolled back and that these funds, won't decrease the amount that you can deduct on your tax bill for 2020. Again, not final, but this was a pretty weird rule. I just wanted to cover it because we we do kind of expect it to hopefully get changed in the, by the time next year's taxes are coming around. The last one I just want to highlight was interesting. 2 days ago, there was some Democrats from the House's Small Business Committee, put forth a proposal that had a lot of changes to generally the PPP loan program and SBA lending in general. And they hit on one thing really important. There's a link to the 3-page document in the presentation if you want to read through it in full. But one of the main things they addressed was that the the 8-week period from which you have to use your funds, which is also backstopped by this June 30th date by when you'd have to rehire employees or pay people back to what they were paid before, should be extended, especially where people are getting loans funded to them in May, and 8 weeks doesn't even, like, you don't even have 8 weeks between then and June 30th. And the fact that if you're trying to actually bring people back on, it's hard to do so at a full level when demand is not there due to places being shuttered or other reasons. So the proposal kind of says, let's stretch this to December 31st instead of June 30th, and the 8 weeks to 24 weeks. So this is an encouraging step, and obviously this is not a passed bill, and it has to go through multiple steps in between. But people in Congress are thinking about that this 8 weeks is not good. Unfortunately, time is of the essence here, so we hope that things can move more quickly than they are, just like I think as most people have been thinking this entire process in terms of guidance and rules and things of that nature. So I'm going to stop there, and then I'll let Meredith kind of jump into some questions that we can kind of talk through.
Great. Thank you, Justin. Some good updates there. So our first question is, how do we apply for forgiveness? When should we apply? Will forgiveness be, so let's start there. There's a couple follow-ups on this one, but how do we apply and when do we apply?
Yeah, sure. So we have a slide here that kind of just touches on it. I'll just use it, as a backstop. So the general process is that you'll have to apply to the lender that lent you the money. So in the same way that, the SBA wasn't issuing loans directly, they were issuing them kind of through lenders. The same thing will happen for forgiveness. Well, you'll be applying through your lender for forgiveness. They'll be the ones kind of certifying it and then kind of writing off that balance. We anticipate, that process happening, I would think, after the 8 weeks. It can't happen, beforehand. You have to show exactly what you've spent. So if you think that, the process started, first people started getting funding, in maybe in late March, then this is going to go for kind of a few months where the first people who got loans will start hitting their 8 weeks, relatively soon. Others it'll be more into, late July, something like that. And then, so we expect kind of, okay, the 8 week period ends. Now, submit your documents to the bank to prove that you use the funds in forgivable ways. There hasn't been any clear guidance on what documents will be required, but our expectation is that it will kind of mirror what was going on with applying for the loan amount, with a few obvious kind of tweaks we would anticipate. First off, a lot of borrowers used Form 940, Form 941, your business tax return Form 1120. If you're more of a LLC sole prop, you might use 1040 Schedule C. And all those tax forms, aren't done obviously on a random 8 week period. They're done, quarterly or annually. So those won't be as useful for proving forgiveness. What was really useful in determining loan amount the first time around, an average payroll, were payroll provider reports. Companies like Paychex, Gusto, JustWorks, and TriNet, and a bunch of others, created reports to help you automatically calculate your average payroll. Otherwise, you have to maybe pull your own payroll docs from your QuickBooks or any other records you have and kind of do those calculations. And we anticipate the same thing to kind of happen this time around, where some of these providers will probably provide tools within their online software to help you calculate these amounts, especially around the payroll. And then you may have to do it on your own otherwise. Then there's obviously things like, how do you prove your rent payments? How do you prove utilities? Logically, just kind of playing that out, it's either going to be some type of documentation around, here's the bill I received, and then maybe also like, here's actually what was paid out of my bank account. some people, if you want to take the very conservative approach on how to best document this, you could put the money that you receive from PPP in a separate bank account, and then, change, all your payouts to come out of that account alone. And at the end of that period, you could just look at the beginning balance and the ending balance, and then you'll kind of have that with and other documents as backup. From accounting purposes, there's also been people recommending you create a sub account essentially, and you book expenses specifically to your PPP account so you can keep track of it in your accounting software as well. So this is an area where we expect a lot more clarification, but I think if you follow like the general spirit of things that kind of went on with the application process, it probably will follow this, a similar type guideline. At least that would make sense. Minus obviously like, substituting in some more bank account kind of bill stuff and kind of dropping maybe some tax forms.
Great, thank you, Justin. A follow-up there, will forgiveness be given to those who raise salaries?
So I think this, yes, is the theoretical answer. I think, general guidelines for how to use your funds are that, if you're saying I want to raise salaries because I was, planning to give a raise to someone anyway, and, we are able to do that with these funds, then, that will probably be allowed or at least not, investigated. I think that, in that case, if I was taking the real restrictive approach, I would say, well, if you had if you were going to raise salaries, then could you have just maintained salaries and not taken a PPP loan? Would be kind of like the angry retort from someone who is looking to poke holes in that argument. I think, what I would recommend is, again, this is not this is just my opinion here, is that you would do whatever you would do in normal course of business and operate under that kind of guideline. If your your revenue has gone down significantly, thus you needed this PPP loan, then, maybe giving raises to everybody in an attempt to, meet 75% of the usage, is somewhat of a interpretation that could say goes against the spirit of the program. I'm not going to tell anyone individually what to do, but I would say, if you're like, hey, I've cut staff and now I'm going to raise the payroll of everyone else to make up for that, that reduction provision, you may run into some sort of issue with forgiveness. It's hard to say because no one's really played out these scenarios from, the SBA side. But I think as long as you act in good faith, generally is the best guidance I can kind of provide at this point.
For business owners who are not on their company's payroll, they don't have W-2s, if they have historically paid themselves with quarterly or annual draws, how would that work in this scenario, especially if they don't rehire certain people in the process but take on the task themselves?
Yeah, I think, it's if you're paying, yourself on a monthly schedule or, it's through a salary or otherwise, it's relatively easy. You could just basically look at those transfers from, the company bank account, to your personal bank account and track it that way. This is also going to be, if you pay yourself a salary, then that expense would kind of be logged in your accounting books, and that you can kind of track it that way. When you're talking about, quarterly or annual draws, it gets a little more complicated. And, because then you have to say, okay, if I wasn't going to pay myself till the end of the year, till the end of the quarter, how do I, get the applicable amount, into this 8-week period? I think, the most logical way to think about it is, if I was going to pay myself $12,000, for the year, and I wanted to make sure, with that cash payment wasn't coming till December 31st, then I would say, okay, well, 8 weeks of that is 2,000, and I can pay myself that 2,000 now and then get that money forgiven. I'm not sure exactly how it would work with, maybe like depositing that into an account and then not technically taking the cash payment until a later date for tax reasons or something else. But I think as long as you operate, in any of those cases under the whatever used for my calculation, essentially like if you had a $12,000 owner's draw that went into your 2019 payroll that was part of your average payroll calculation, then essentially you're looking at 2 months equivalent of that is what you should pay yourself during this. I think if you're talking about giving yourself a raise because you've had to let other people go, then what you'll need to be careful of is tripping potentially the $100,000 cap. Meaning you can't raise your pay to in these 2 months to the equivalent of over $100,000 a year, or you can, I guess, anything over 100 will not be forgivable. It's kind of a long-winded answer. It's probably one of the more complicated type of questions that hopefully will be answered a little later on as the guidance tightens up.
For an individual that has had their employees continuing to work 40 hours per week, but agreed to accept whatever they could pay them at the time, knowing that they were approved for the PPP loan, is it okay to pay them for hours they worked prior to the loan arriving and catch them up? Will I be forgiven for this?
So this one is a little bit tricky. And again, I know I say this all the time, but be careful about, I don't know this for sure, but the way that I would interpret this is if you had employees that, in February or say March or in maybe beginning of April, worked 40 hours and you paid them only for 30 and said, I can't afford to pay you this, but I'm going to basically, pay you this when we have the money to come in. So basically they worked 40, you paid for 30 as an example. Then you basically, what you've done is accrued that liability to your employees. And when you receive the PPP money, I think my interpretation would be that seems reasonable to pay them that debt you owe them because that was for hours they did work. I think where I get a little bit more nervous is if you say I cut, hours back to 20 or 30 hours a week from 40, and those employees did not work that time, but I want to essentially pay them as if they did. And that one makes me more nervous because you're not, paying them for something they did. You're essentially just making them whole. It's kind of like a retroactive bonus in a way. I know that's makes it sound like it's better than it is. Obviously, these people, would have maybe worked if the demand was there or you had the money. But I think, I'm just going with the most conservative interpretation, and I would be a little bit more nervous of doing something like that than I would be for paying back pay.
Is subcontract labor a forgivable payable?
No, it's not.
We have a couple more questions around what is forgivable. Justin, would you be able to show us a slide and just walk through what we know right now? What are forgivable
Sure.
expenses?
Sure. Okay. So these are the kind of all the forgivable expenses that we have defined for us now. The main one of these is payroll. Payroll in healthcare, are kind of listed some places as together, some places as separate. But if you just, going for payroll and healthcare benefits, this kind of in many ways, mirrors what the calculation was done when you got your loan. It's the total gross compensation, with the $100,000 cap on cash comp, plus, any leave or retirement benefits, other things that count as compensation. Then it's, employer paid health benefits. So, this isn't the same thing as if it's deducted from employee's paycheck, but specifically just like when you got your loan, what the employer pays towards that. Then you have, interest payments on any mortgage. So if you, own the space which your company occupies and you have a mortgage, that would be applicable. You have payments on rent, utilities. You can refinance, your SBA EIDL loan in that period, and then also interest on debt incurred before February 15th, 2020. That answers the question, right? It was what are all the items that are forgivable, correct?
That's perfect. Helped knock out a couple questions there. So switching the subject matter for just a moment, Seth, we have somebody who's applied for an EIDL, but does not want to take the loan, has not signed any documents. Do I deduct the advance of $4,000 from my PPP forgiveness amount?
Yeah, that's a good question. So The way that the EIDL program interplays with the Paycheck Protection Program is that if you received an EIDL loan between January 31st and April 3rd, and you used it for payroll, then you'd be required to include the current balance of your EIDL loan minus any advance you've received, in this case, $4,000, from your Paycheck Protection Program loan calculation. In this case, you have the advance. If you used that on payroll and you are applying for Paycheck Protection Program loan or forgiveness, you don't need to worry about that $4,000 because it's an advance, it's a grant. So that's yours to keep and doesn't impact the forgiveness amount or the loan amount that is associated with the PPP loan. So the short answer is no, you don't need to worry about that.
Great. And Justin, for some one further clarification on what is forgivable, is commission something that is forgivable?
Sorry, I was probably hitting my mute button there. So commissions is, generally, would be considered wages, right? If you're a salesperson that's paid on commission, then that, yes, is part of your wages. So that would be forgivable.
Great. And regarding loan forgiveness and the requirement to bring back the same amount of employees, let's, in this example, assume the number is 10. If one of those 10 employees are on FFCRA, 10-week pay for childcare, would that mean I would have to hire an additional employee therefore making my total 11?
I'm not super familiar with that program, so I'm hesitating to answer. I think that if they are still technically employed by the company despite not working, then you wouldn't need to hire an additional employee. Seth, are you any more familiar with that program by chance?
Yeah, I don't have anything else to add there, unfortunately.
Yeah.
We'd have to follow up on that one.
Great. So we'll look further into that, and if you join us next week, hopefully we'll have some more information there. So in this particular example, we have an individual who received a PPP loan and is hoping to get it forgiven, but they have a couple issues. The first is they have a client who wants to hire them full-time for 2 months to work on a project. If 75% of my loan is going towards my salary, is that a conflict or will impact my ability to get loan forgiveness? I'm going to assume this person is most likely an independent contractor.
My read on that is yes, that would impact you. If you were a independent contractor working for yourself, getting paid via 1099, then if you accepted a full-time W-2 job, then you would kind of, well, I guess it all matters like if you wouldn't then be working in your other capacity. I suppose you could do both. There hasn't really been any guidelines on that. I'm not quite sure how that would work. I think if I think about it like, I was working for myself, this was what I was earning, this is the loan I got, and then instead of continuing that work, I got a different job. A full-time job. I'd like to say that seems a little bit like a double dip if you then also paid yourself from the PPP funds, even though you had no intention of doing that work. I understand maybe if it's temporary, there's a slight wrinkle there, but it seems like if I then paid myself PPP and took a job for 2 months and then quit that job and then went back to normal and I just basically got paid what I was making before plus was able to actually work on the other job, seems a little like a conflict, but again, we don't have guidance on that.
Yeah, I think our best read on that right now would be that, your PPP loan is meant to be a salary replacement for yourself.
Yeah.
However, that said, like if you're also getting additional employment, it's not likely that you would be penalized for that because that's a good thing. And the spirit of this law is meant to, support employment. So to Justin's point, we don't have specific guidance on that exact scenario, but that would be our best guidance.
Yeah, the other thing you could say is like that employer that's paying you could be using PPP, and then you'd also be using it essentially twice. But again, it's like Seth said, it's to support payroll. So without clear guidance, it's hard to say one way or another.
Right. Can you use the funds for new employees? So in this scenario, no employees were let go. They would just be using the funds to hire additional employees.
Yes, is the short answer there. There's been no, stipulation that this is supposed to be, for a steady state, kind of, hey, I had 10 employees in this reference period, I have to maintain 10 employees in this other period. I think the question then I would have is, you probably won't be able to, you may not have enough money for PPP to pay them all out of PPP. And then two, kind of, was this certification of necessity really true if you're doing well enough where you can hire extra employees? I think I would not worry much about the last case and would say that yes, generally, if you're increasing employees, that's great. You just may not have, like if you based your loan on a lower employee count, you just may not have as much money to pay them as someone who did more of the is kind of at the steady state employment.
Great. And for a final question, switching subjects a bit back to EIDL, an attendee's understanding was that, Seth, that if you use the EIDL loan for different things than what you use the PPP loan for, both would be forgiven. Can you provide some clarity there?
The EIDL, so there's the advance piece, which is forgivable in the sense that it's a grant, right? It's not even a forgivable loan. It's just a grant. So you don't, you get to keep that money straight up. You don't have to prove anything to get it forgiven. The EIDL loan portion has payment deferrals. I believe it's 12 months from when you get the loan. It comes with an automatic deferral. I'd have to verify that to be 100% sure, but I believe that's correct. But that piece is not forgivable. So the forgivable loan is only for PPP.
Wonderful. Thank you so much. All right, we're up on time. It is 1:30. Again, thank you to Justin and Seth for taking time out of your week to come share this knowledge with us. As you can see, there's a lot we're learning and there's still a lot of clarity we're looking for in the guidance here. But as soon as we learn things, we provide that to you, as well as give you our best opinions on how to handle different situations. If you did not get your question answered today, we are saving these to try to get through as much as we can during each webinar, and we are also providing forms beforehand if you would like to submit a question prior that we can prepare for. That's also greatly appreciated on our end. We can get you the best possible answer. But thank you all for joining us today. We will see you again on Tuesday at 1 p.m. Eastern. And in the interim, if you need anything, you can find us on Twitter or support@fundera.com to answer specific questions. Thank you all so much.